Us. I'm Nico.
Okay, well, hey, good afternoon, everyone. Thank you for being here today. My name is Adrian Ramirez, and I'm the Associate Director at the Career Development Center, and I'm also the Interim Coordinator of the Money Management Center at Fresno State. For those students who are listening in, we have a great presentation about, the thing that we all got to do this time of year. We all got to prepare our taxes and file for our state and federal income taxes. And we have a great organization here, a local organization with individuals who will introduce themselves shortly. And Moore Grider and Company Limited Liability Partnership is here to provide us information about tax preparation and what to consider. So without further ado, I'd like to welcome Nico and Shayna. Thank you so much for being here.
Yeah, thank you. It's a pleasure.
So just to let everyone know, I will be monitoring the chat room. So if you have any questions throughout the presentation, and if you'd like to, ask questions of the presenters, let me know, and then I'll jump in for you. And also, we are recording this webinar, so that way we can post it later on, so you can take a look at it at your leisure. So. And then just for students on campus, the Money Management Center, it's a free resource. We're located in the Frank W. Thomas building, room 104. And that building is pretty much right in the center of campus. And so you can come in and get services with the Money Management Center. You can talk to one of our peer financial coaches. We call them Bulldog Financial Coaches. And they can help you with a variety of information and resources related to your personal finances. And we also have our great website. So if you go to fresnostate.edu/money center, you can access our information there as well. And you can get onto our program called Unleashed. And that program has a variety of information related to personal finances, taxes, credit scores, credit cards, all kinds of things that everyone has to do, and has to manage and learn how to operate and navigate the whole spiel of finances. So come take a look at our website, and then come in our office and have a conversation with us. So we'd like to go ahead and get the webinar started, the presentation. So thank you very much, Nico and Shayna.
All right, thank you. All right, well, to quickly introduce myself, I'm Nico Lavandera. I'm a recent MBA graduate from Fresno State. I just finished up in December of 2021 with my MBA. I started at Moore Grider in June of 2021, so I'm one of their newer hires, but I've known partners and things like that for a very long time. And so, yeah, it feels good to come over. Before this, I was at Aplo Software, which is a local software company that makes accounting software for nonprofit organizations. So its specialty is that it does true fund accounting. So it's kind of a QuickBooks competitor. That was really neat to get into the accounting world. As you can see by my pictures, I'm a big family guy. So some fun stuff over here: sister's graduation, wedding day, trips to Disneyland. So when I'm not accounting, doing all sorts of stuff, audits, tax over here, yeah, I'm spending time with my family.
Hi, I'm Shayna. This is my email and LinkedIn up there. And I started here in July 2019, and I have about 7 years of tax and accounting experience. So we're ready to answer your questions.
That's all right. All right. So do you want to take it away first?
Sure.
Okay.
So the first step in filing return is determining whether or not you're dependent. So you can be claimed as a dependent if you're between the ages of 19 and 24 and a full-time student, and if your parents provide more than 50% of your support. And in this case, you can still file a return, but you would check the box that indicates you're single and are claimed as a dependent on another person's return. And this means that your parents get to receive the $500 credit for claiming you as a qualifying child.
Awesome. So next, we'll talk about the filing statuses. So there's different categories of individual tax returns. You'll have single, and that's if you're unmarried at the end of the year. Head of household, unmarried at the end of the year, paid more than half the cost of keeping up a home, and you have a dependent. So you have to have a dependent for that status. Married filing jointly, married at the end of the year. And there's also married filing separately, and it's a tax status for couples who want to split their income and exemptions. There's a variety of reasons why you may do that. Some couples may benefit from it. For example, if there's going to be significant medical expenses or other reasons to itemize, they might have better tax benefits by filing separately.
And another reason would be if one of the partners owes child support or something like that, where they would take their refund, you can do what's called innocent spouse relief, and that would be a good reason to separate your returns so that you're only responsible for your tax liability.
Yep. So those are the filing statuses. Now let's talk about who's required to file.
So if you're over these income thresholds based on your filing status and your age, you're required to file a return. But if you are under these, say you have a W-2, you made $10,000 during the year and you had withholding, you could get some of that withholding back. If you were to file your return, even though you're not required to file, it still would, if you had any type of withholding, it would be beneficial for you to file a return because you can get those withholdings amounts that were taken out of your check back as a form of a refund.
Yeah. And a good example for a lot of you who may be joining us is if you're a student, you may be able to deduct certain college expenses and claim certain education credits, such as the American Opportunity Tax Credit, which we'll touch upon later. So even though you made less than what you were required to file, you were less than that threshold of where you needed to file, you may still receive tax benefits by filing. So this is who's required, just know that you still can if you're underneath. Now, these are a few places where you can file. So TurboTax, H&R Block, and IRS Free File. For TurboTax and H&R Block, they're actually free if you're beneath certain income qualifications. If you have a simple return, so maybe you just have a job, you just have a W-2, that's your income statement from your employer, then you can do it pretty easily through some of these free resources. If it's more complicated, you might want to see a tax professional, CPA firm like us. There's also VITA from irs.gov. That's volunteer income tax assistance, and it's always free.
And then check out the irs.gov website to find locations near you.
Yeah.
And some of the basic things that you'll need to file your return, you'll want to start with last year's return, assuming you filed last year. Social security numbers for yourself and any dependents you may have, and then your bank account information if you'd like to do direct deposit. You want to get that refund faster. And then also your address, of course.
And date of birth.
Date of birth.
Yeah, well, your date of birth. All right.
So real
yes.
quick, we have a question. And feel free to answer if you can. So if we have an international student who's here in the United States and they get money from their parents, how does taxes work for them?
I think that'd be a gift, right?
If they're getting money from their parents, it would be a gift that wouldn't be taxable to them.
Or if they're a dependent for their parent too, that would just be receiving support from their parent. So it wouldn't be taxable income.
Yeah, that wouldn't be something you have to report on return.
Yeah.
Okay, thank you so much.
You're welcome. All right, so what you'll need, this is income side of it. So your tax return is really broken into three primary categories. You'll have your income, deductions, and then you'll have your tax credits. So we'll start with income. This is the money that you earn. So at the top, we have W-2. This is if you're a hired employee, salary, or hourly. Then you have different types of 1099s, and these are different types of income, such as 1099 NEC, that stands for non-employment compensation. If you're an independent contractor, so very common jobs right now are Uber, Lyft, and DoorDash. We've been seeing a lot of the ride-sharing economy, and so see lots of these days. This form used to be called 1099 miscellaneous, but they updated that this year. There is still a 1099 miscellaneous, but for independent contractor work, it's now NEC. There's 1099G, which is state refunds, unemployment compensation. So it's generally money that you receive from the government. 1099R, retirement plans. So this is money that it's either you put in or distribute for your retirement plans.
For the 1099Rs, it would just be for the distribution.
The distributions, okay. We saw, oh, gotcha. And then there were provisions for the American Rescue Plan, I believe is what it was in, right? And that allowed people to distribute earlier and record the income over a 3-year span. So we've seen more of that from people who weren't of retirement age pretty often the past couple of years. And then your 1099 dividends /B, so stocks sold, securities, or received dividends. You'll get these from the institution where you trade these. And then not listed on here, another common one though is 1099 interest or 1099 INT. And those are just interest dollars that you earn generally in bank accounts. You'll receive a statement from the bank.
And then this is just an example of a W-2 that you'd see. It shows your employer's name, the EIN number of the company, the wages, the withholdings. All that information is information you'll need to input into your return, or whoever's doing your return.
Yeah, and you just want to make sure you hit every box if you're doing your own, doing one of the self preparation options. It can be, some of them look very similar, but you'll see they're numbered on the right-hand side, and wherever you do prepare your return, they usually have a corresponding number to make sure that you pull the information from that box.
And this is a 1099-G. This is for the unemployment, or they also have state tax refunds that you get these forms for.
So similar. And then 1099-B this year, like I mentioned, this is for money that's reported sale of assets. So these are different shares that they owned. They sold them, and then you record your gain or your loss on those sales. They do get separated based off of whether they're short-term or long-term, and it's all right there on the statement. So you just give this to your tax preparer, make sure you input it and fill out each field and record this for your tax return.
And then if you were self-employed during the year, which you rode for Uber, Lyft, DoorDash, you had a side business, you'll file what's called a Schedule C. And this is where you take your 1099 NEC, you'd put that in your return as your income, and you'd be able to deduct any expenses you had for the business. So if you're a rideshare driver, anything you bought for the riders, fees or commissions paid to the company, business phone use, parking fees, etc. And for this one, you'd also be able to take standard mileage, which for 2021 is 56 cents per mile, or you can do actual mileage. Actual mileage would be taking all the expenses, which would be car wash, maintenance, repairs, registration, interest on your car loan, depreciation, and insurance, the business use portion of those, and then you calculate your deduction there. And if you had a side business selling homemade face masks or something of that nature, you would be able to deduct any materials or supplies you incurred to make those face masks. And the income minus expenses for the Schedule C, you'd be taxed self-employment tax on that.
Yeah, and with ride sharing, the companies provide a statement for you that has your miles, but it doesn't track when you don't have a passenger. So when you're driving to meet a passenger, it doesn't record that portion. It's good to document them. Those miles, you can do it either handwritten, or you can use, there's several different apps that you can use to track the mileage. So if you are doing ride sharing, it's good to keep track of all that because it's going to help your mileage reimbursement.
Yeah, and you'd want to have it documented either in an app or on a spreadsheet, because if the IRS were to ever come and audit you, they want to see documentation of your mileage.
Yeah, they like proof.
Exactly.
All right, so we've received a few stimulus payments over the past couple of years. So the one that's going to be most relevant in 2021 is going to be the third economic stimulus payment. So you'll receive a letter from the IRS, letter 6475, that details the amount of third round stimulus payments that you received. If you haven't received it, you can sign up for and you don't remember, because for me, like, I was able to look at my bank statement and I can see it, even though I received the form later. But if I wanted to pop in, I was able to look there first. You can sign up for an online account on the IRS website and track your stimulus payment.
And then this would also be a good way to check if the IRS thinks that you received it and you actually didn't get the money. You can call the IRS and have them trace it so that you get your money. Because if you put it on your return, says that you didn't receive it, and the IRS says you did receive it, they'll just reduce your refund. So you want to make sure that you figure that out with the IRS before you file your return.
Yeah. Cool. Yeah, and then like you stated, the recovery rebate credit. So that's that section. If you didn't get the full payments, this is where you're going to want to see how much they think you got, and you can dispute it there.
And as far as deduction goes, there's a standard deduction and then there's an itemized deduction. In this chart, you can see based on your filing status, what your standard deduction would be. And this is just the flat amount that anybody that's in this filing status gets to take as a deduction. And the other option, if you had more certain types of expenses, you would itemize. So if you had a lot of medical, if you had state and local income taxes, property taxes, DMV fees, mortgage interest, investment interest, charitable contribution, casualty losses, and gambling losses, you would be better off itemizing. You really just take whatever one's higher.
Yeah,
And
just,
most of you will probably do the standard.
yeah, and just kind of conceptually what the deductions do for you, they reduce your income, so that's why they call it deduction. So it'll adjust your gross income, and by lowering that based off of your tax bracket, it'll reduce the amount of taxes you owe. So the standard deduction, that's just kind of a flat, anyone filing single, married filing joint, whatever you qualify for right there. That's the flat amount that you can just take. Otherwise, you itemize, you want to provide support for all the different deductions that you're going to take. And that will reduce your income, meaning you have less taxable income. So say by itemizing, you're able to claim another $10,000 as a deduction. And if you were in the 12% tax bracket, then it would save you the 12% of the $10,000.
I know a lot of people use a standard deduction, especially since the IRS in recent years have basically doubled them.
Mhm.
That most people don't qualify, even if you have a home and you have property taxes and all that, they don't qualify to itemize. So you really, you want to keep track of your expenses regardless, because the standard deduction for California is a lot lower, but most people will just take the standard deduction for federal
Yeah,
in most cases.
awesome. So here's a list of some things that you'll need for your deductions. 1098T, most of your students out there watching, so you'll receive that through Fresno State. You can access it via My Fresno State. If you are in your first 4 years of college, the American Opportunity Tax Credit is a really great tax credit that you have access to. The 1095A healthcare, Medicare, parents insurance. California is a penalty if you don't have health insurance. So you want to make sure that you recognize that you have that to avoid that penalty. And then charitable contributions. If you do not itemize, now we talked about how when you itemize, you add up many different types of expenses. Charitable contributions are something that you can still receive a deduction for, even if you choose not to itemize. And so these can be things, donations to different programs, whatever it may be, to reduce your taxable income. If you have anything you want to add?
Yeah.
Cool. So here's an example of your 1098T. And so you'll see the forms all kind of look similar. They give you the information, they give you the numbered boxes. So we just make sure we pull everything in from here. Kind of the most common ones we see filled out on here are boxes 1 and 5. So that's your tuition that you paid, and then your scholarships or grants. And so you subtract box 5 from box 1, and that's how much you paid and how much you would get credited back for.
For your tuition and fees deduction, or the credit, the tax credit.
Yeah. Some other things, now they're not going to be listed on your 1098T, but if you have to buy books, if you have to buy parking passes, things like that, those are also deductible. So it's worth it to keep track of your other expenses that are required for school.
And the earned income tax credit, this is a refundable tax credit, which means that it could reduce your taxable income down below 0. So essentially you'd get that money back as a tax credit. And it's based on your filing status and whether or not you have dependents. There's specific thresholds that you have to be under in order to qualify for this credit. So the lower income you are, the more of a credit you get for this earned income tax credit.
Like she mentioned, even if it takes your taxable income beneath 0, you can still receive the credit. So maybe you aren't working and you're not of the age to qualify as a dependent. You can still take your earned income tax credit and receive a refund. All right, and these are some helpful resources that we have for you. So irs.gov/VETA, like I said, those are the volunteers. irs.gov/free file. And then you can always reach out to us. Our contact information was on the first couple slides. And this video will get uploaded. So yeah, we will be here for you. Sounds like Fresno State has some great resources too, as Adrian mentioned.
Money Center. You guys have any questions?
We got some shy people on listening in right now, I guess, but I guess I'll start with this these tax resources here that you're showing us. Is there like income requirements, or can anyone file for free and so on without having to pay tax preparer if we're doing like a simple?
For VITA, I believe it's anybody. I don't think there's income requirements for that. For Free File, there would be income requirements for that one.
Okay.
Yeah, so
Alright.
it would detail that on the website, the specific income thresholds.
Okay, I'm trying to decipher this question that we got in here. So, oh, okay, here we go. I was like, I didn't know if it was an abbreviation or not. So, okay, if you get Social Security or unemployment, can you file for taxes?
Absolutely, yeah.
Okay.
Yep, those would be income. So like unemployment would be that 1099-G. And so you don't have to be a W-2 employee. Pretty much any qualifying, even without those types of income, you can still file your taxes. And there'd be reasons to do so, such as the EITC or even the, well, what's it called? The stimulus payments, things like that,
Yeah.
if you haven't received it.
Okay.
Yeah,
Well-
and those forms are reported to the IRS. So if you get a 1099-G or anything like that, or Social Security, it's reported to the IRS. But Social Security, the thing that's different with that is it's not taxable unless you have other sources of income. So if you have wages, interest, anything like that on top of Social Security, then that would determine how much of that's taxable.
Okay. We have a question like, when is the last day to pay federal taxes?
This year it's April 18th.
Yeah.
Fingers crossed that they do not extend that.
Okay.
You
Let's
can
see. Go
can
ahead.
extend your return until October 15th, but the last day to pay your taxes without getting a penalty is April 18th, even if you extend. It's an extension of time to file, not an extension of pay to file.
Okay. So we have some students asking more questions. So if we pay rent, can we put it on our taxes?
The only thing that you can do is you can, for California, they have a qualified renter's tax. I think it's like a $60 credit on your California return. So if you're a qualified renter, you can take that credit. But as far as paying rent, unless you had a business, you can't take that on your return. That'd be
Okay.
personal.
I think the person, I guess, wanted to ask if you could repeat a little bit about that taxing Social Security again that you mentioned.
So Social Security income is not taxable unless you have other sources of income. So if you have interest, dividends, any other source of income, depending on how much that is, it determines how much of your Social Security is taxable. So you'd have to put all the information in, and then it would take a percentage of the Social Security and tax that. So it wouldn't all be taxable unless you have a bunch of other income.
And then on the paying rent, now we talked about Schedule C earlier. That could be income, like if you were running a business from your home. Say you had a room and it was half of your apartment, then you could use that to reduce your income.
Yeah, it's called the business use of the home.
Yeah.
So if you're working from home, you can take a portion of, based on the square footage of the area that you use solely for business,
Mhm.
you can take your utilities, your rent, internet, things like that, and it would take a small portion of that.
Yeah. And then different apartment complexes have different rules too. So that would be up to that separate. But yeah, if they do allow it and you run a business from your home, you can use that based off a percentage, the square foot percentage.
Fantastic. Yeah, these are really good questions, students, and these are really good answers from our guest speakers here. So this one's talks about the child tax credit. So here we go. So I claimed a dependent last year and received the monthly installments of the child tax credit. However, this year, someone else will be claiming that dependent. How would that affect my return? Any tips?
You will have to pay that back because it's whoever, they basically do a reconciliation of the tax credit because you got half of it up front And if you don't actually file and claim the dependent, you have to pay that money back. It was an advanced child tax credit, assuming that you would take that person as a dependent on your 21 return.
Okay.
So it would essentially reduce your refund.
Yeah.
Okay. All right. So like, let's say you had a major purchase, for example, like a car. Can you get a credit for the sales tax?
Yeah, I know you report the registration.
Yeah, you take the DMV fees, like the license fee,
Yeah.
but as far as anything else, you don't get a credit for that. It would be a personal loan.
Okay. This one has to go back to that VITA office. I guess somebody was looking at the website that you offered. And so they found that they're offering a VITA office services on campus. Any additional information about those services? I would, if you don't know, I would just tell the student probably just to contact the VITA office and then ask them where it's located on campus. I think it's in the Crimin Education building, I believe, on campus.
Yeah, we wouldn't know where that's located
Yeah.
specifically, but I'm sure the directory would help you
Okay.
with more information on that.
Yeah, that's what I would say. Just the director would probably be the best. Okay, so how about can you get a credit for solar purchases, like purchasing solar?
Please.
Yeah.
Yes. If you did it in 20, as of December 31st, 21, the tax credit is still 26%. So you just keep track of all the expenses, and then you put on your return, you get a 26% tax credit. So that could be pretty significant depending on the cost of the solar.
Okay. Yeah, we got a lot of students really wanting to know about all this. So this is great. Good stuff. So what do you recommend to help someone who's never filed taxes before and they need to file as an independent for their first time?
I would reach out to a CPA firm or VITA or some other kind of organization like that to help kind of guide you on the right path.
Okay.
Yeah, and then they'll help you organize. That's the hardest part with filing the taxes. Well, that's one of the tricky things when you're starting to get rolling on your own is organizing, knowing which forms you're going to need, what you need to report. And so just meeting with a tax professional will really help you with that. They'll ask a lot of good discovery questions. Just, what income did you have? Were you making money as an employee? Were you doing contractor work? Now let's talk about the standard deduction versus itemizing. Let's talk about you as a student, what you have your record of. You're going to get your 1098T, but did you have your receipts for your book purchases, things like that? And because someone who's filing on their own may just think to do their W-2. They just see that and they think, this is my income, this is all I need to report. But it really does help to have a tax professional who can ask you those questions and make sure that you are really filing correctly and that you're getting the most out of your taxes, both not just reporting the income, but also finding out, if you have any credits, any deductions that you can and should be taking.
Fantastic. So let's see here. My son didn't work, but didn't get a stimulus either. How does he go about receiving it? He's a full-time college student who lives with us. Can we claim him?
Yeah, you definitely would be able to claim him. He would be your dependent based on him being a full-time college student. Assume he's 19. Okay, I see that.
Yeah. Okay, so you can see it now. Okay, good.
Now,
I
yeah.
see the age
Okay.
now. So yeah,
Here,
he
I
would
can
be a dependent. So even if he was to file his return on his own to try to get the stimulus, he's able to be claimed as a dependent on your return. So he wouldn't be able to get that credit on his return. So assuming that your income is low enough, you can get the credit for him.
Yeah.
For the stimulus.
Yeah, based off of what you said, it sounds like you should be the one claiming him as a dependent right now, even if he's an adult. If you're providing more than 50% of his income or his support, then you would be able to claim him as a dependent. Now, if he is providing for himself, if he pays more than 50% of his own weight, he could file it as an individual and then claim that he didn't receive the stimulus and still receive that on his tax refund.
Yeah, but it looks like the
Tax
parents
return.
were the ones that will be claiming him and getting the credit.
Okay. And so this is probably just income, but do I pay taxes as a full-time student who works part-time on campus as a student assistant?
Well, like
They're
we
getting
said
a
before,
W-2, yeah, right?
yeah.
Yeah.
And like you said before, you may not be required to file depending if you're under the threshold, but if you had withholdings, you might want to file because you can get that withholdings back as a credit. I mean, as a tax refund.
Okay, very good. I'll ask a question for me, as a matter of fact, because I'm just curious myself. I did my taxes just recently, and I received a 1099 for an individual retirement account. And so I got dividends from that IRA. And so, but that money gets reinvested. So why would I pay capital gains now if later on when I take it out, will I get taxed again? I just had a question about that.
If it's reinvestments, it wouldn't be taxable on this
Okay.
return. It would just be if you received any dividends. So it'll show you on your 1099, it would show you any dividends you received, and that would be what you pick up. But
Okay.
reinvestments wouldn't be taxable.
Okay. Well, I got a 1099 dividend form, and I guess I received money. It's probably just sitting in a money market account, so I'm getting taxed on that already. So I was just curious. I was just
But you
interested in
shouldn't
that.
be taxed on that. It would just be that one time.
Okay. Thank you so much. All right, let's see here. The students want to know if they can go back to your or can they contact you as far as like your email or anything about any particular questions they might have, or are you welcome to that?
Yeah, they can
Or-
send us an email.
Okay. Okay. So yeah, at the beginning of the presentation, they gave their email address for you to if you need to contact them. And I don't know. I guess one of the questions, I don't know what they're referring to, is what is the threshold again? I don't know what they were referring to.
Well, when they upload the presentation, we'll have the charts on there that show the threshold based on your filing status. So if you want to take a look at that whenever they upload it.
Okay. All right.
And then
Oh,
we're
thank
put-
you. Yeah, you typed in your email. We appreciate it very much. Yeah, students, thank you. I mean, we've got to thank the speakers definitely for allowing us to ask questions as we can. Let's see. Here we go.
One more question.
Yeah, because of course, yeah, our speakers. Yeah.
The girlfriend and son, can she claim him? The
Do you mean
girlfriend,
claim the son?
yeah, claim the son, I believe. She would be able to claim him depending on if she's the sole provider. She would be able to claim him on her return as a dependent.
She has a job. I'm curious if she was asking if they filed joint, which they wouldn't, but
No, just be if she filed her return.
yeah.
And essentially, if the son is not working, she could claim him as a qualifying relative as well.
Yeah.
Yeah, so that would also be an option. It depends on the specific circumstances, of course, but that would possibly be an option.
All right. Well, I'll come back. I'll turn on my video here and jump right in. So yeah, I mean, thank you so much. I know we're kind of winding down. Students were thinking about some questions I asked, and you definitely answered all of them. So if you have any follow-ups in the chat, they have their email addresses, so you can definitely get a hold of Nico or Shayna. And but before we go, any last questions or anything, students listening? No? Okay. All right. Well, they say thank you so much. They appreciate you giving all this great information and tips. And they're saying thank you in the chat. So I don't know if you could see that, but yeah. Okay.
Pleasure.
Welcome to all.
All right. So yeah, I mean, this is a part of life, everyone. We all have to do it. We all have different circumstances, situations. So it all depends. And I'm a big proponent of reaching out to professionals as well, because they definitely have all the ins and outs and tips and regulations, and they're up to date with everything that we need to do. So it's really important for us to to reach out to them. Let's see. Okay, so without further ado then, thank you so much, everyone. We appreciate the time today. And again, this is recorded, so it will be posted on our YouTube channel shortly. And again, if you are on campus, come to the Money Management Center. We can definitely help you with a variety of different resources. So have a great day, everyone. Thank you so much. And thank you to the speakers as well. Thank you.
Thank you.
Okay, bye-bye.